all of the weekly charts being very, very bullish and indicating that after the stock market falls next week, that might be the bottom of a little bit of a dip before we continue higher. Hi guys, it's Stock Curry, and the market fell again on Thursday. We now have multiple bearish indicators. I'm going to do a full technical analysis for you to show you where the stock market might go next. So let's get into it. The stock market started the day out up about 1%. It looked like this was going to be a nice green day, a nice rally after yesterday's sell-off. And yet, this stock market dropped 2% intraday to finish the day down 1%. We also broke below numerous support levels. I'm going to show you all the technical analysis and show you exactly what happened. First, I just want to show you that on a day like today, where the market is just consistently going down, it's very easy to make money day trading. I day traded QQQ today. I was in and out of calls and puts all day long, making money on both the way down and the way up throughout the day. And it netted me an over $8,000 profit on the day. Now, I want to be clear, I don't make over $8,000 every single day trading. Today was a bit of a unique situation. It just happened to have been a very easy day to day trade with the market consistently going down. If you want to learn how to day trade, you can come join my coaching program where I will teach you how to trade options so that you can make money no matter whether the market goes up, down, or even trade sideways. You can sign up for that at weprofitdayandnight.com. Go get more information. Schedule a call with an onboarding specialist at weprofitdayandnight.com. Now let's go over the market technicals. I'm going to show you both the daily and weekly charts because we have a little bit of disagreement between the dailies and the weeklies. And I'm going to go over all four major indices, including the Dow, the S&P 500, the NASDAQ, and the Russell 2000. So let's get into it. Getting things started with the Dow, we fell below the 21-day EMA today on the Dow. We are now below both the 10-day and 21-day EMAs, and we also have a death cross on the MACD. So for the Dow, this is a very bearish daily chart that we are seeing, and it looks like the Dow will continue to go down from here. The weekly chart on the Dow, however, remains bullish. And we remain above the EMAs. We also remain green on the MACD. This is a very bullish weekly chart. And that's the theme that you're going to see in all of these indices is a very bearish daily chart and a very bullish weekly chart. Depending upon how the stock market trades next week, we might start seeing some bearish indicators on the weekly charts. But for now, they remain quite bullish. And this would seem to indicate that the pullback that we're getting on the daily charts is going to be temporary before we just continue higher in about 2 weeks or so. Now, if the daily bearishness continues and it's more than just a pullback, we could see the weekly charts turn negative as well. But for now, they remain bullish. So we remain in a bullish uptrend on the weekly charts, an overall bull run, but the daily charts are giving us a little bit of trouble and a little bit of indication that either we have topped out and we're going to start going back down, or at the very least that we're getting a bit of a pullback that will probably last about another week before we continue higher. We're not going to know whether this is just a pullback in an overall bull run or if this is actually a top in the market. We're going to start going back down again until probably the end of next week. So for now, it's a bit uncertain, but what is certain is the daily charts are very bearish, and it does look like we will have another red week next week. Now moving on to SPY, which is S&P 500 ETF. We closed below this upward channel that we have been in for the past couple of weeks. And this is actually very bearish. The fact that we closed below that's a very bearish indicator. We also closed below the 10-day EMA, which is bearish. The MACD isn't quite at a death cross yet, but it probably will be tomorrow. But just like the Dow, the S&P 500 remains very bullish on the weekly charts with the candle above all of the EMAs and the MACD well into the green. Again, very bearish daily chart, very bullish weekly chart. And we find the exact same thing on QQQ, which is a NASDAQ 100 ETF, a little bit more bullish than SPY. We did close below the 300-day EMA, which is bearish, but we stayed above the 10-day EMA and really all of the EMAs. We're also a little bit further away from the death cross on the MACD, so we only have a little bit of bearishness on the QQQ or NASDAQ 100 daily charts. And like the rest of the charts, the weekly chart remains very bullish, although we did get a slight dip below the 100 EMA on the weekly chart, so we'll have to keep our eyes out on that, but otherwise very, very bullish on the weekly chart. The IWM is very similar to the S&P. We had a pretty major drop today on IWM. This is a Russell 2000 ETF. And we did break below an upward channel that we were in. Very, very bearish. We also broke below the 10-day EMA. Again, very bearish. And we got a death cross on the MACD. Again, very, very bearish. So IWM, Russell 2000, very bearish daily chart here. But just like all of the other indices, it remains a very bullish weekly chart with the candles above all of the EMAs and the MACD well into the green. And the other very bearish indicator we got is the VIX. Whenever the VIX goes up, the market goes down. And we were watching the VIX that had hit this sort of channel where it normally rebounds, but it's been in this channel for the past couple of weeks. And today it broke out of that channel to the upside, which is very bearish. As I told you yesterday, any close above 20 on the VIX would be a very bearish indicator. We closed at 20.71. So the VIX is also very, very bearish on the daily chart. So very consistent pattern here with the daily charts being extremely bearish and indicating that the stock market probably will continue to fall for at least another week. But all of the weekly charts being very, very bullish and indicating that after the stock market falls next week, that might be the bottom of a little bit of a dip before we continue higher. We're not really going to know just how bearish this becomes until probably the end of next week, or maybe not even until the week after. The one thing we're not sure of yet is whether the bearishness on the daily chart will persist long enough to cause the weekly charts to start to become bearish. But for now, they remain very, very bullish. We can certainly handle another down week next week and still remain very bullish on the overall uptrend on the weekly charts. Now getting into some of the news that moved some individual stocks on Thursday, Coinbase shares fell as the SEC took action against Kraken, which was their crypto staking partner. Essentially, the SEC says that Kraken can no longer offer crypto staking. Coinbase shares fell over 14% on the day. And Yahoo is going to lay off another 20% of its staff by the end of the year. Yahoo is a private company for the most part, but this is still going to be bad for the economy. PayPal had good earnings. They beat earnings expectations and reported a strong full-year profit. PayPal earned a profit of $1.24 per share versus $1.11 per share a year ago. So nice increase in profits on PayPal. The stock initially ran up pretty significantly until it was also announced that the PayPal CEO, Dan Schulman, would be leaving at the end of 2023. PayPal finished the day up 1.73% after hours as of the recording of this video, but it was down 1.63% during the day. And Lyft shares fell over 20% after the company issued weak guidance. Lyft reported a net loss of 74 cents per share, and revenue came in slightly better than expectations at $1.18 billion versus $1.16 billion expected. Lyft shares were down almost 25% after hours as of the recording of this video. They were already down 3% on the day. It's nearly a 28% one-day drop on LYFT. And Expedia shares tumbled as Q4 results missed as travel demand ran into harsh weather. Expedia reported fourth quarter net income of $175 million versus $395 million a year ago. Earnings still managed to improve, though, with Expedia reporting a profit of $1.26 per share versus $1.06 a year ago. Shares initially fell 7.4% after hours on that huge earnings miss. But then Expedia gave really good forward guidance and shares recovered significantly. They were only down 1.79% as of the recording of this video. So that's what happened today. It was a pretty non-eventful day overall, but tomorrow we do have more economic data and Fed speakers coming out, so we'll have to see how the market reacts tomorrow. If you got a lot out of this video, then be a good friend and share this video with your friends and family so that they will know what's going on in the markets as well. And don't forget to hit the like button and subscribe. And if you missed yesterday's video where I went over some more analysis of the markets, make sure you go watch that video here.